Hello and welcome to a midsummer 2021 edition of Matt's Minutes. I hope those of you in the Midwest are able to get outside and enjoy some of the warmer weather, despite all the rain and perhaps all the mosquitoes that we're all experiencing. I wanted to kind of connect as I record this video. There's some choppiness in the markets today. For example, July 19th, Monday, middle of the day, the Dow is down 700 to 800 points. And so I just thought it'd be a good time to just revisit where we're at, what's going on, and talk through actionable steps that we are taking, and then customized solutions to help all of you manage through the ups and downs of the economy. So thanks for tuning in. So with the Dow being down, I think it's okay. We don't think that we're turning into any sort of recession. I think it's very natural that you could have a correction, which is just a swing down in the market of 10% from its previous high. And so that is certainly possible. In general, from an economic standpoint, there's really good news out there. And the whole world is really trying to move forward from the pandemic and hopefully put the pandemic, behind you in the rearview mirror. There's obviously the Delta variant out there, which is still of concern. And yet, locally, Henry Ford Allegiance Health, which is our hospital system here in Jackson and surrounding areas in Michigan, just this summer released or removed, I should say, their visitor restrictions. And so that's an important step as we move forward. And you think about the word visitor, what does that really mean? Mostly to hospitals, visitors are anyone other than an employee or a patient. So beyond me just going to visit someone who has a procedure or surgery, there's a lot of healthcare companies that need to have access to hospitals and doctors and physicians and healthcare administrators to try to get their products to patients. And so that should be also a really good sign, hopefully, as we get into the second half of this year and into the 2022 year. So we've talked all along that we think coming out of this, pandemic-induced recession is not going to be a straight line. It's going to be choppy. And so this is just an example of that. The other thing I wanted to mention, it's all over the news, is to talk about inflation and what are our thoughts. So you're really seeing spikes of inflation in some key categories. A little bit in food. You're seeing the highest spike in inflation early in this year and into the summer with lumber and wood prices for home building projects. And so there's still some supply and demand issues that are being worked out from the pandemic. And that goes everywhere from, building a house to adding on a deck to doing a home improvement project. Personally, I ordered a couch for our home to replace a 15-year-old couch last fall and still don't have the couch. So there's just some interesting supply chain things going on. But ultimately, we do think those will get worked out. Inflation was really high in the used car sector. And so when you look at overall inflation, we are still of the mindset that it's going to be choppy and sporadic like we're seeing, but also temporary, not permanently seeing prices. We've already started to see prices of lumber start to come back down from their peak. They're not back to where they were pre-pandemic levels in 2019, but still a move in the right direction. So with all of that, we've gotten really great feedback from those of you who have worked with us on your Riskalyze scores. And so a refresher on Riskalyze, what is Riskalyze? It's a score of 1 to 99. 1 is being ultra conservative, 99 is being ultra aggressive. And every individual investment that's in your portfolio has its own risk score based on its own volatility over a trailing 6 months. And so when you take that risk score of an investment times the dollar amount, and you go through 10, 20, maybe 30 holdings in your portfolio, basically get to a risk score. 1 would be cash in the bank, safe, fixed annuities, for example. Anything above 90 would typically be individual stocks of all make and sizes, small cap, mid cap, large cap. The broad market would be a risk. S&P 500 is about a risk 75. If you had everything in your portfolio in the core bond market, that would be a risk 25. And just as a reminder, Dan Vredeveld, another CFP at our office, just did a video. We can set your tolerance on the portfolio, and because the portfolio is dynamic, as markets ebb and flow, your risk score can actually change. And so every time we as advisors talk to you about your portfolio, we're going to have that as part of our discussion, just to say, here's where your risk score is. Here are the tolerance ranges or the goalposts based on how we're invested now. And we've had really great discussions with a lot of you where we've made some adjustments. We're slowly moving in that direction. And let's say that your risk tolerance is a 40, for example, but we find that your portfolio is now at a risk 50. That helps guide us with investment decisions to start bringing down your risk score, which means a more narrower goalpost. And so we're going to continue that discussion. It's been really helpful. We're grateful to continue to serve all of you through everything that's been going on. Thank you so much for tuning in. And this is Matt Curfman with Richmond Brothers for a midsummer edition of Matt's Minutes. Thank you.